We begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues, Ben Levisohn, Megan Leonhardt, and Al Root. Ben, stocks. Good week for stocks again. Is it the same stuff that's been working all along?
Well, it depends on what you count as working all along. This was a big week for big tech. And big tech had actually fallen out of favor a little bit. But this week, it was back in a big way. Meta in particular hit a new high, got a boost on Friday with the TikTok possibly getting banned. I called it the TikTok. I'm sorry about that. But yes, it was a great week.
Only because you're 100. Go ahead.
I am. So the NASDAQ finished at a high. The S&P finished at a high. The Dow dropped a little bit, but it had been leading before, so it's okay for it to take a rest.
Okay, everyone seems happy with their 401k
They love
performance. My friends keep asking me, is the S&P 500, is my fund about to tank because it went up too quickly? And I tell them, I can't tell you that. Only Ben knows that. So tell my friends, are there S&P 500 funds about to tank?
Well, I look at the stock market and I'm scared. Stock market's expensive. The valuation is high. It's gone up more than 20% for 2 years in a row. That's probably not a great thing. But then I look at everything that's going on. The economy's great. AI, people are worried about it, but AI has been great. I'm thinking, why not? Let's go for year number 3. I think actually the risk is that we go up even more, not that we fall.
I mean, you're absolutely right. The fundamentals are there, Ben, and really the economic fundamentals. So we actually just got jobs today on Friday. It was really a good report, pretty benign. And what was interesting, though, was we saw unemployment tick up. And I actually think that this gives the Fed room to cut this month. So it will be an interesting one.
Ben, what are you watching in the week ahead?
Well, speaking of the Fed, I'm looking at inflation. It has 2 things it's supposed to do, price stability and full employment. We got the full employment. Now we just need to see inflation come in right where it's expected, about 2.6% for the headline. That would be in line with October. If it comes in at that level or a little bit lower, market's going to be fine.
Okay, Al, AT&T had an investor day. These are shareholders that not too long ago had to wear paper bags over their heads out of embarrassment about what the stock had done for a very long time. Now they're holding their heads up high. The stock is outperforming since spring. What's going on?
Yeah, I think a couple of things. I think the big message from the investor day was share buybacks over, sending money to money heaven. Remember old columns of yours, buying DirecTV. They spent, including debt, between 60 and 70 billion on all of these assets.
Dishes on your roof, that's not the future of television.
And then, they sold them for much less than they bought them for. So, they're going to generate like 50 billion of free cash flow over the coming 3 years. And the new strategy is take 20 billion of that and buy stock back in addition to the dividends. So I think the message is really, if you're not like a fast-growing AI, stock with great outlooks, why don't you just give cash back to shareholders?
So it's a phone company that has figured out that it wants to be a phone company. No more show business, nothing crazy. Would you buy the stock here?
So our colleague, Paul LaMonica, pointed out something very interesting. AT&T is up about 40% year to date. It's outperformed Verizon by about 30 points. Verizon is also a phone company, no crazy strategy, also huge free cash flow, and trades at about 9 times earnings. AT&T trades at 11. He thinks it's a good idea to flip into Verizon for 25.
Okay, interesting. Megan, our cover story this week is on international investing. Now, I dutifully put some of my savings in international and overseas markets, even though the U.S. has outperformed forever, and all I really care about is when's NVIDIA going to double again. So am I still doing the right thing here?
I think it really is about a diversification play when it comes to international exposure right now. It's good for value as well. And if you do have, an active management situation, this is the time to really employ it. Now, it's one of those situations where we have some names that our experts kind of came to us with that everyone knows about. And we have some that most people have probably never heard of.
Let's hear some picks.
All right. So, the big one, I think, is Hermes. Obviously, a really great luxury brand. It has, exposure in overseas markets. It's getting in a lot of good things right now. Of course, Al, you're going to love this one. BYD, everyone's favorite e-car company out of China. I'm going to call it an e-car. I love that. And then, we have some ones that are a little bit different. So out of India, one of the analysts was talking about Mrs. Bector's Food Specialties. This is biscuits and breads. It, feels like a very quaint, fun company, but it is actually a great buy here. And
food here is boring. But in India, maybe this is a hot stock, a growth opportunity.
I do actually think it's a growth opportunity. So this is a good one. And the last one I want to talk about is a bank. I know it sounds kind of boring, but this is OTP Bank, and it is headquartered in Budapest. It actually is the largest Central European bank for both retail as well as commercial. So this is something where we may actually see it get a little bit of a boost when we start to see Ukraine, get into that reconstruction phase.
What about for someone who's not a stock picker quickly? Is this one where you would go to an index? Would you use active management?
I really think this is an active management kind of play. I think you have to be a little bit more cautious and really kind of plant the flag in places that you know are going to give you some good returns, especially if you're doing this long term.
Got it. Thank you all.